Hey guys, how's everybody doing? Good morning. Good morning. Sorry, this is a few minutes late. I was trying to do 9:15, but I got sidetracked for a second. All right, I just made my drink. My collar. All right, let's share the screen. Let's check out some stock market action. Okay, here we have S&P 500 futures. This trades 23 hours a day, 6 days or 5 days a week. This is a 30-minute chart. We've been out of the Bollinger Bands. We got out of the Bollinger Bands yesterday, and we reverted back to the most recent mean, which is the most recent point of control, the nearest point of control. Wouldn't be surprised if we do the same thing again. Lots of time, but oftentimes in a continuation move, they'll use the pullback to the last POC at point of control as a place to buy the dip. So who knows? Who knows? But you can. But if you're bearish, my point was you could use this. You can use that strike to target. Like if you wanted to do a 0 DTE trade and you wanted to play a reversion to mean strategy, you could get out the SPY here and you could figure out wherever your closest POC was. And this one is not going to work. This one's not as far away from its closest POC point of control as the S&P futures are. So let's look at Qs. Even though S&P futures and S&P cash, which I'm going to call S&P ETFs, so there's things that aren't futures, so like SPY. Even though the futures control where they go, they don't go one-to-one. It's because SPY, or if you buy stocks, you have to factor in the dividend. So an index doesn't pay a dividend. SPY pays a dividend, but it's an ETF made up of all those funds. You guys know how ETFs work. All right. Well, we've reverted right back to this. I mean, there's nowhere. If we reverted to being on the NASDAQ, it would be back down here to 489. And I think there's going to be lots of dip buyers right here. So we'll see. I'm surprised we're still going up. Look at this. I'm really keying off there. I'm sorry this chart's so ugly, but this orange gap is the gap created by the election. And so we're over that. And that's huge to be back on the other side of that election gap. It's staying on top of it would be considered a good bullish sign. But what I was going to say also, this orange gap down here, this big orange gap, that is that's tariffs. So staying on the other side of tariffs is really important too. We could give up the election gap, but if we were still over the tariffs, I'd be all right with it. I mean, and we may have to back and fill a little bit, but we can talk about that whenever we do. Whenever we do dip, we just never seem to dip. Okay, well, we'll look at something else now. How about that? I was up late last night working on the MaxFactor, and I have some new stuff to show you guys. Let me see here. I guess we can just start with the retirement simulator. And we're going to look at Misty trades. Okay, now Misty trades were easy. There was only 3 of them. And this is interesting. I want to talk about this. You see this all the time. A buy, an SS, and then another SS. And it's all the same number of contracts. It's 1,000 contracts. Okay. What that means is they had a create yesterday. A create is when they have to create a creation unit. When a creation unit comes into existence. Look at the assets under management on Friday. Look at the assets under management, or this is Thursday night. Well, now that was Friday night, and this is, I don't know. That was Thursday night. This is Friday. Anyway, the assets under management went up by, nearly what is that? Nearly 200? Is that right? 200? Gosh darn, I mean, it went 3.8 million. Oh, it's 200,000. I'm like, gosh darn it. All right. I used to be really good at math. All right. So they need, well, it's not 200,000. Yeah, I guess it's 200,000. Okay. Well, anyway, they need what that gives them is that new money coming in, however much it is. It gives them, they need to put it to work right away so they can pay the people, they need to pay those people expected dividend. How are they going to give those people a dividend? This is exactly how they do it. So they bought the 390 and they sold the 390, bought the 390 call, sold the 390 put, and that goes out to June. See that 620? All right. Let's just look at this real quick. We can see how these guys do. I'll look at some earnings trades. I know we have a Palo Alto Networks. It's a real liquid. I'll do a fresh one in there. I have one on in that one in real life. I put it on Friday. I also have puts in real life, which aren't working out, but anyway. All right. Let's do this. How long is that a future? Okay. MSTR. And they went out to 620. And what did I say? 390. It really doesn't matter. You could put this anywhere, but okay. So that right there gives them the exposure to the stock. That's the synthetic. Now they want to do this. They did 1,000 contracts. Okay, 1,000 contracts. So that's basically like buying the. Now, what am I thinking? 200,000. I am an idiot. It's $2 million. $2 million in creates come in, right? Oh gosh. Yeah, because it went from 4 point. It's billion, of course. It's because it's billion. 2 million of creates came in. This is what happened. So this is about a $2.1 million debit. That would explain it. All right. So this is what they do. They every time a create comes in, they do this. And then they have to pay you, though. They have to find some way to pay you. This just gives you exposure to the stock. So they're going to do a sell call. All right, now we can go back and look at where the sell call was and get the prices. Okay, so it was 390. It was 44 and 21 on the synthetic. The cents don't really matter. You guys don't care, do you? 44. 21. Okay, those are the wrong dates, but that's another story. Change expiration, 620. Okay. Gosh darn it. I'm sorry, guys. All right. Okay, so their synthetic doesn't expire for a while, and that's generally the way it works. But this is going to be in the weekly time frame. I don't even have to look. That's the way they always do it. They always do it in the weekly time frame. We're going to look anyway, but we don't have to. We could. There it is, 523 weekly time frame. It's the 435 strike, and they sold it for $3. We will use the 90 cents on this one because it's a lower number. They sold this baby for $3.90. Well, not that baby. They sold this baby for $3.90. So we'll keep an eye on this. Let's save it, and we'll see how this creation unit does. But basically, the fund is a bunch of units that look just like that. Okay, so if more money comes in tomorrow, they might do another one that looks like that. But that's the base unit. That's the smallest part of any of these funds, and you can see what they give you. They give you unlimited loss on the downside. Pretty much full exposure to the downside with the slight buffer. They give you some chance of upside. If Mr. goes up here this week 6%, the fund will make about 2.5 million in NAV. Okay, and that's in addition to the $3.90 times 1,000 times 100, whatever that comes out to. A lot of money. Okay, well, anyway, speaking of that, let's do this. We'll hit save. We'll call it the Misty trade. We have some Misty trades from last week in there, and they're up millions of dollars. We'll follow this one. All right, so in a broader sense, they spent 4 million yesterday. Or they brought in 4 million and they spent 2.5. Gosh darn it, sold. Yeah. So they lost a little bit of money yesterday, just as far as NAV goes. No big deal. They're still killing it. They're still killing it. Here's how they've done over the days. I need to work on that. Don't look at that. Forget you saw that. That's a disgrace. Oh my gosh, my spreadsheets are so bad. Jackson, how are my spreadsheets so bad? Gosh damn it. Why didn't I take why wasn't I a data analyst? Why didn't I study data analyst or something in school? So this stuff isn't too hard. It's just pluses and minuses. I'm good at the concepts, but I can't make some. I mean, it's ugly. All right. So let's look at some other stuff. Let's go to let's see, that's the trades. This is everyone's trades yesterday. You could see the same. Well, no, you can't. Hang on. Bobo did something very similar. They had to create, I would bet, because they bought one unit. They didn't do 1,000 times. They did 700 times. Well, actually, they closed a unit, and this is actually just a rollout. Never mind. They just closed. They closed something and opened something new. But you see that a lot. Those units that are the same number. Look, 1,000, 1,000, 1,000. Oh, that's the close. That's close. Anyway, there's some on here. You just got to take my word for it. All right. Well, let's look at the GPT verse, and which we aren't really looking at that, but that's the name of the spreadsheet. It's not that one. See, like this should be easy. It should all be on one spreadsheet. I should never have to look for it. I would say, and that's something that anyone that has any ability to present data at all is this is a disaster. Anyway, my apologies, guys. It's a disgrace. It is a disgrace. Index buffer. All right. Well, look at old SFAL down the most. Of course, it's up the most a lot as well. So I guess that's fine. Darn it. SFAL's down 2.2%. SPY-T's even down. XDTE. The market turned and gone down, or my put's going to pay off? What's going on? I mean, you can't tell anything because it's so zoomed in on this because the market's moved so far, so fast. I mean, this is a disgrace too. Charts are the number one thing you have to show when you're a stock market channel. This looks terrible. Anyway, maybe the other channels probably don't give you as many free winning earnings trades. So I guess it's whatever, but I mean, I don't even like looking at that. Anyway, how's the market down? Is the market, are they calling that, I mean, is that making those things go down? Are you serious? S&P's down 1/3 of a point. NASDAQ's down 1/2 of a point. I mean, I thought SFAL may be going down because VIX is up, and VIX is up a little bit. I mean, 1.7%, really. Nothing to sneeze at. All right. Well, anyway, sorry about SFAL. YQQ's up, of course. Riser's up. That's good to see. I've been hearing people say that we aren't getting lower rates, we're getting higher rates, regardless of what the Fed does. We've seen that. The markets say no. Riser. I just don't know if I believe that. But if I did believe that, Riser would be a good way to go. But Riser's a good way to go just for diversification's sake. Riser's a great fund. Look into it if you haven't looked into it. It's a great fund. I don't know if I've ever made anything on it, and it's because it's bonds. I don't fully understand it. But I mean, I think I do when they tell me, it has limited duration or has negative duration is what they're saying. So I guess it'd be kind of like a 0 DTE strategy or something, but I just didn't know enough about it to put it on there. But whatever it is, they make it where it's sensitive to interest rates in the opposite way of most high yield. Most fixed income funds are sensitive to interest rates in the way that if interest rates go up, you get murdered. This is the opposite. Okay, so there's that. Let's look at the Yield Max Buffer Report, see what's going on in Yield Max land. Let's see. We have any YBIT's outperforming on the downside a little bit. Infly is too, but it's such a good fund. Who cares? Snowy. Of course, Snowy's parent asset, Snowflake, has earnings today. Or, I'm sorry, has earnings. Or they had earnings last week, right? I don't know. Well, look, I thought this is the worst update ever. This is officially the number one worst update. I was up so late. I have all new MaxFactor stuff. I was trying to keep the MaxFactor more simple because I don't like just metrics after metrics after metrics. Well, but I discovered some really cool new metrics last night. So, let's see how ULTY is doing. These stocks may have, I mean, this is as of last week or something. There's a chance one of these might be gone or something, or there might be a new one there. I used to do this every day, but it's just too much trouble. Same thing with LFGY. I used to do it every day, but it's, I mean, we'll just, if I'm lucky to do it once a week. There's LFGY. So assuming, you know, to the extent that these stocks are still in there, and they keep most of the stocks in there for most of the time, but you can see Tesla's helping LFGY out. Hood isn't. Anyway, all right. Like I say, this is a bad update. So let me try to think. I don't even know if I can save this. I wanted to show some other stuff. I wanted to show this email I got from Defiance. I don't have any of this, but MST paid a dividend. They paid 33.5 cents. It comes to about 100%. Next distribution is in a week. Now, what these guys do is they don't use options, but they use swaps. Well, a swap is an option, or it's kind of like it's an option or a derivative. It's called a derivative between two institutions. It doesn't trade publicly. It doesn't trade on the open market freely like options do, but it's functionally a similar deal. It'd be like if you and I got together and I said, okay, I think Apple's going to be the best stock of the year. And he said, no way, it's not. And I said, okay, well, sell me an option on it. And we could do an option between ourselves. I say, okay, I think it's going to 300. Okay, well, I'll sell you a 250 option on it. Or you could sell me a 250 option on it. Okay, well, how much do you want? I want $500. Okay, here's $500. And this expires in a year or whatever. So in a year, you got to give me whatever it's over 250. All right. If it goes to 300, you got to give me that 500 I just gave you back, or essentially you will. You don't have to give me that same 500, but then you're going to have to make up the difference. Now they can build what's called a coupon or a payment, a dividend, a yield into a swap also. If two banks made an agreement on a yielding asset or a covered call strategy, they can figure out on pencil and paper what it should make, because options are just math. That's the cool thing about it. So they know what it should make. They can build leverage into it or not. So anyway, these swaps are with leverage. I don't like them because they're not transparent. We can't copy the strategy. You know, I love adopting these strategies to retail accounts, and the whole world's learning all kinds of new strategies. No one knew how to do a synthetic covered call before this came out. I mean, option nerds did, you know, but now the whole world, now it's an easy subject. So anyway, it's an exciting time to be an option bro. All right. So what do you guys want to talk about? We'll do some earnings trades or whatever. All right. Good morning, SB. Good morning, Dan. Good morning, Mark. I need to remember to not leave these up. Good. You're just watching ES Trade Sideways. Yeah. All right. So let's go to earnings land and option land. So let's see what we've been doing. Okay. Baidu. I don't have that one on in real life. I meant to put it on, but I forgot to. I do have on Snowflake in real life, and anyway, that's fine though. All right, so let's just look at the ones we've created this week. So bullish shot for 2 weeks on CleanSpark. Well, that was created. We didn't do that, did we? Yeah, I think we did do that one this week. Well, oh yeah, it's cheap. Okay. I don't know if this one has earnings or not, but to me, that's an alternative to owning this. It's an alternative to owning the stock. It's roughly the same. Look at the profit and loss graph. I mean, anyway, they'll do well as long as the market goes up. There's the Misty trade we put in, already up $267,000. This Baidu trade had good math. $82 is a good anywhere between 50 to 150. For the 3-leg risk reversals. That's kind of the zone. The zone I like. So that's right in the middle of it. And it was liquid, so liquid. Look at this. This put was bid at 80, asked at 87. It was more liquid yesterday. Bid at 30, asked at 36. Bid 58, asked 71. It's not super liquid, but all right. That's Baidu. Target earnings trades. I don't know if they had earnings yet. It doesn't matter. We're just waiting for time to pass. It's on that one. Home Depot. Now, I was watching Liz and Jenny yesterday, and they were talking about that Home Depot was a bad one to do because of the IV and the price. They also trade a small account. Liz and Jenny, they also trade smaller accounts. So anyway, they were talking about that too. But more than that, the IV just, according to them, I think it was the IV didn't justify it. It's a 37 vol and a $350 company. So I need to remember. So I'll need to even stop showing those. I hope you guys didn't even do one. We don't want to do anything that Liz and Jenny aren't interested in. I mean, I don't want to. I mean, because they may do a different type of trade. They don't have this trade. This trade's better than their trade, I think. But whatever. They have the Jade Lizard or whatever. It doesn't matter. They still need the same set of circumstances to be present. High volatility, tons of liquidity, and it helps that the asset price isn't $387. It helps when you're trading to $20,000 or $30,000 account if the asset price is, it's $100. Not that you can afford to do this one, but it's going to be 4 times the size. And if you miss it, I would rather do four $50 companies and $80 companies than one $380 company, right? All right, so let's see what else. Okay, so Palo Alto Networks has earnings. I guess we'll just go to the earnings thing, wherever that is. Who knows? There's no freaking telling. There it is. All right. Targets before the open tomorrow. So Home Depot already had. So it's good that if somebody did do that, they didn't just miss bad and you lost all your money. But that was stupid. When I put that on, I said, we're just going to do it just to watch it. Maybe from now on, we'll only do ones that are above a 50 on a vol. Of course, they have to have liquidity, but we'll only do ones that are above a 50 and under 200 or something. Or, unless we have a good reason not to. We can do whatever we want. Anyway, okay, so Palo Alto's after the bell today. Let's freshen that one up because I showed that one the other day, but those option prices are probably no good anymore. So let's build the bull put spread, which is the basis of the bullish strategy. Okay, boy, I can see the liquidity from here. Jackson, what are you doing? What's the matter? He just got up and looked up. Did you see something? He's looking out the window. There may be a deer out there. I have a green belt right behind my house that's up on an elevation, and there's deers. It's the most beautiful thing. They're just beautiful deers walk by. It is fawn season. Fawns are born in May and June every year. And I haven't seen one with my own 2 eyes yet, but a lot of the does I take care of have obviously had them. They've lost a lot of weight recently. They leave them back in the green belt. Lots of times the first time I see them will be at my back window, but they leave them back there. Then when they get bigger here in a month or so, they'll be running around the neighborhood. But it's awesome. It's one of my favorite things about living in Austin. All right, so let's look at this. This is a little bit, that's about a fifth. I like to get more like a fourth, risk reward. Here's $234 on $1,000 risk. That we can work with that. Maybe here's $207 on $800. Okay, that's same ratio. Okay, so we're going to do that, and then we're going to do this. We're going to add around a 15 delta out of the money call, just in case this thing goes exponential after earnings, because there's a catalyst. If they're in normally I wouldn't want to do this. Normally I might just, if it was a normal day, depending on what the stock was, I'd probably just want to sell the put spread. It doesn't always make sense to do a risk reversal. The reason it looks like I show them to you every time is because on earning stocks, to me, it does solely because of the fact of the binary event. That's it's the one time that I don't want to be short, or that I want to have some upside. Is the week of earnings or downside. I mean, all right. Well, let me save that and I'll put that in all right. If there's anything else you guys want to see or talk about, put it in the comments. Hey, Summit, how are you doing? Good to see you here. Good to see you here today. But anyway, I put that trade in there. You're there, but 25 minutes behind me. Okay. Well, you'll be hearing this in 25 minutes, I guess, right? All right. Well, anyway, thanks for being here, Summit. Okay, perfect. Let's see. What else was I going to do today? Let's look at one more earnings trade. Let's make sure we have this covered. Baidu should be a good one. I wonder if maybe TJX or Wix, maybe Lowe's. I just don't know about Lowe's. Isn't Lowe's super expensive? 234. That's not super expensive. Wix is under 200. I just haven't heard about it having really. I don't really hear people trading Wix options too much. Damn, look at that. These are long-term charts, but look at TJX. What in the heck? Isn't that a clothing company or something? TJ Maxx or something? My Lord. Let's see if Lowe's is. I mean, yeah, Lowe's has done the same thing. I guess it's just a great time to be in retail, right? Look at Target. Now, Target, maybe not for Target, but a great time to be in retail for Lowe's and TJX. I think that's TJ Maxx. I don't know. All right. The Snowflake's going to be a good one. That's going to be good. ZM should make a good one too. I knew there was another one we wanted to look at real quick. I'll let you guys go after we do the ZM in the absence of any other questions. We could do a bearish one on any of these too. I mean, if you guys want to, just let me know. If you're bearish on any of these companies, don't do this trade. If you don't think earnings, this trade can't fix a bad earnings report, but if there is a good earnings report, we're going to try to harness the volatility and maybe a little upside at the same time. That's the whole idea. Bull put spread on ZM. This appears to be somewhat liquid. Let's look at our risk and reward. $400. That's perfect. We'll maybe do this a couple of times. And finance it just in case. This one right here is a 15 delta, landed right on it. Okay, so let's go back and look at the IV. We said we won't do anything under a 50, I think under a 50 and over $300. So this one's a 90. So this is perfect. This call out here isn't super liquid. That's why be careful if you put this trade on yourself. It's bid at 57, asked at 69. I go for the middle, just like everybody does. That's why on Tasty Trade, it defaults to the middle. But anyway, start at the middle and try to, work your way out. Be cautious with that one. You could also maybe move it. Sometimes a one or two strikes in or out is more liquid, but none of these are. So I'm just going on the delta. 15 delta is about perfect for this strategy for me. That means 85% of the time it's not going to come into it's not going to help. And that's not actually totally true either. But anyway, it's close to true. All right, here you guys go. Let's save this trade. Copy link. Yeah, that one's really not a bad one. I'll probably do that one in real life. I meant to do Baidu in real life. Hey Thomas, yeah, TJ Maxx. Home. Oh, it's Home Goods. Okay, my sister keeps Home Goods in business by herself. Yes. Okay. Well, that makes sense now. when they put a Home Goods in my sister's hometown, my hometown, yeah, she's there all the time. Okay. Well, that makes sense. Kind of like the Restoration Hardware store. They're selling. There's a big, large population of upper middle class ladies like my sister nowadays, more so than there even used to be, 30 years ago. And yeah, those kinds of things like Restoration Hardware and Home Goods. Yeah. All right. Well, I appreciate you guys for being here. I hope that one of those option trades helps you out. Maybe. Sorry about the charts, but we'll review everything. So we talked about the MST dividend. It's 33 cents. The MaxFactor, I'm going to show you. I know the MaxFactor chart is substandard right now, or the looks of it are, but we're gonna talk more about that at lunch. We're going to talk more about that at lunch. So just be here at lunch, basically. All right. We don't have to talk about everything every time. Okay. I'll answer one question here. Ethan, would you factor in the unusual call open interest as a sign of bullish sentiment, or do you view it as speculative position? That's a good question, Ethan. Well, I could view it as both. I'll tell you this real quick on open interest. When somebody's buying out of the money calls, about a month ago, the 6,000 SPX call started getting bought like crazy, like way more than the 5,900 or the 5,950. When dealers are short that call, what it means, people like me and people like Ethan are buying the calls. Dealers have to sell the call. Well, market maker's not going to take any chance. So as soon as he sells that call, he's going to offset it. He's going to offset it with stock but anyway, when there's strikes that have a large amount of open interest, they can act as a magnet for whatever reason. And I thought I need to share the link. There's some guys on TV that follow or on YouTube that follow it. It's called, well, there's a couple of them, but I'll post the link. But anyway, I thought this guy was nuts. I understand the theory of how it works. I'm like, that's too far out of the money. That 6,000 call is not going to serve as a magnet. Well, guess what? We hit 59.95 this morning. These option positioning, like large amounts of open interest here, and where the dealers are short and where the market makers are short and where they're long, all that kind of stuff is a huge factor. It causes reflexivity and feedback loops, and it's a huge factor. I don't talk about it that much other than just the most basics of it, because that's not my area of expertise. I'm trying to get you guys in a good option position. But yes, you can, or I'm trying to get people in the right type of option trades, but that's kind of my expertise is that. But yes, it is absolutely something you should factor in. And I want to start talking about it more. I'll post that link in Discord, but these guys do a really good job. I'm just trying to total blank on them. They do a really good job. Anyway, all right. We can talk to some of that other stuff, but the primary risk about buying options, period, is they're too expensive historically. Anytime you're buying an option, it's like going to the strip club. You're going to spend money. Now, is it going to work out for you? I don't know. Maybe not, but it's going to cost money, right? So here's the other thing. So when you buy an option right before earnings, it's a double whammy because right before earnings, volatility is super jacked. So you're paying the highest price. It'd be like going to the strip club on New Year's Eve without a reservation, right? You're going to spend a lot of money. Same thing, right? All right. Anyway, we'll cover the rest of these at lunch. I got to get out of here. I'm going to take Jax for WA, okay? But good questions, Ethan. I appreciate. We'll talk about the counter spread at lunch. I appreciate the question. All right. You guys have a good one. We're also talking about MaxFactor at lunch. I realize lunch for you guys is just in an hour and 4 minutes, but lunch for me is in 2 hours. I'll be back in about 2 hours. All right. See ya.